You are listening to the audio portion of the QB Power Hour webinar series. The QB Power Hour is a free biweekly webinar series for accounting professionals presented by Michelle Long and Dan DeLong, who are very passionate about the industry, QuickBooks, and apps that integrate with QuickBooks. You can find out all the details about the webinar series at qbpowerhour.com. So without further ado, here's Michelle and Dan.
Welcome, everybody, to another QB Power Hour. We're very glad to having you join us today. Our topic today is handling issues with QuickBooks Payments. My name is Michelle Long, and I'm a CPA with an MBA in entrepreneurship and the owner of Long Success, author of several different books. You can check those out. And there's the link for our Facebook group. It's a very active group, and we'd love to have you join us out there and continue the discussion. Dan, go ahead.
Yeah, my name is Dan DeLong, owner at Danwith. I worked at Intuit for nearly 18 years. So important disclaimer, I am not Intuit anymore, right? So if you have any beef with QuickBooks Payments, I hear you, right? Because I'm on the other side of the Intuit badge these days. But doing the co-hosting today, as well as the co-hosting over at Workshop Wednesdays at Schoolofbookkeeping.com, doing the tech editing for QBO for Dummies. And as a reminder, we're the ProAdvisor, the top 100 ProAdvisor voting is going to be closing. I think this Friday, the 26th. I think that's the last time. So it's the last. If you haven't already, put in your vote for Michelle for ProAdvisor of the year.
No,
it's about time.
No, just vote for Dan and I, please, so we can get top 100 and get free stuff, please.
Yes, I'm sure there's cookies involved.
You can vote for 3 people, and we would appreciate vote.
A little bit of the details about the QB Power Hour. It's every other Tuesday. Not eligible for CPA credit, sadly. But we do appreciate you tuning in, enjoying, and maybe taking a break from your client work or what have you. So we appreciate you joining us here today. We have PDFs of the slides, recordings, podcasts, all at qbpowerhour.com/resources. I did post in the chat the link. I think it's a link. It doesn't look like it's a link, actually. Michelle, I don't know if you can see that and maybe repost it, but it didn't come in as a link, but the slides for today are in there. Speaking of which, if you do have specific questions about anything that we're talking about today on the topic, please put them in the Q&A, because that allows us to see them when they come in, because sometimes when you go in the chat or have throw out a comment or what have you, it scrolls by and we might miss it. So we do our best to try to speak, bring in the current questions that you might be having today. Please put those in the Q&A. Regular off-topic comments or whatnot, you can put those in the chat. But you should be able to see the little QA button there at the bottom, especially if we have to follow up. That gives us a great way to be able to do that. So our agenda today is all about QuickBooks Payments. I really like QuickBooks Payments. It's one of those services that really benefits, I think, everybody, right? Like your clients get potentially paid faster, and because of the integrations, you end up saving a little bit more time in theory, right? But we want to talk a little bit about those but moments with QuickBooks Payments today. So we're going to talk about some of the issues that might come up. New QBO accounts get new payments accounts, and maybe you weren't aware of that. So we want to talk a little bit about how that happens, and maybe have a conversation with your client. QuickBooks checking is a new-ish topic, and we want to make sure that people are aware of that. A lot of these things are, if you aren't aware of them, typically your client will find them, and then there'll be a discussion. So we want to make sure that you're aware of those things. And then there's a lot of confusion about how to handle refunds, disputes. There's a new service And sometimes there is a red alert right on your invoice tracker inside of QuickBooks that says need attention. And there is a specific way that you can get that attention, attended to. So let's start off with our first poll, which is just what version of QuickBooks do you use today? Online, desktop, both, something else.
And Dan, speaking of which version are you using, are you going to specify throughout the session today which, as you're talking about QuickBooks, if it's applying to desktop, online, or both?
Most of the topics we'll be talking about QuickBooks Online payments and the integration, but desktop payment integration or desktop payments, you can do a lot of these same tasks. But when we talk specifically about like QuickBooks checking, that's not a desktop function, or there are some things like that. So we'll point out where it's QBO only features or services here.
Great. And can we give a shout out to Murph? We got Murph joining us there.
Ooh.
Really good to see Murph on here.
Nice. Very nice. Thank you, Murph, for joining us. All right. So let's talk about why QuickBooks Payments first off. So go ahead and end the poll here so I can share the results. Looks like most people are using both, but then the QuickBooks Online is closely following with our desktop loyal also showing up here as well. So why QuickBooks Payments? So my favorite topic about our benefit of QuickBooks Payments is the integration piece, right? Because especially with QuickBooks Online, once you send an invoice or collect a payment, you're pretty much done. This is the theory, right? The theory is you're done entering the transaction because it's an online service and you're using QuickBooks Online in the cloud. Once that payment has been processed, the payment gets recorded automatically. Once that payment has been deposited, the deposit gets made automatically, and the fees are associated with the expense accounts that you set up in the settings automatically, or as Brad Smith would say, automagically. Right. So there is a lot less transactions to enter in when you're using QuickBooks Payments. Now, if you're using another payment provider like PayPal or Square, those things just don't automatically get entered into QuickBooks. Yes, there are, connections and integrations, but they have their own set of challenges built in with them, right? So I like to call it, it's your billing and your bookkeeping at the same time, right? You're doing you've already created the invoice, so you're accounting for the sales and the revenue and terms and the sales tax and all that stuff is being done on the invoice. But then you're receiving the payment and the billing after that, right? And with QuickBooks Online Advanced, you can set up payment reminders when people, and workflows and those types of things, so that you don't necessarily have to follow up with all of those things when it doesn't get billed properly. It's a kind of a set it and forget it. Michelle, what do you think about the integration piece of the QuickBooks Payments?
What I was going to say, Dan, is that so many times that integration is what makes the difference, because of the time involved if it's not integrated. If these companies, the small businesses, they'll go with a third-party provider because it might be a percentage or two or a little bit cheaper on the fees or something like that. Well, then we have that problem where it's not fully integrated, and we wind up spending a lot of time running it through some kind of clearing account and trying to get it posted into QuickBooks. Because of we lack that integration, and we spend so much more time versus if you pay maybe a smidgen higher on the fees, it's not that much more, but in the time and aggravation in getting it into QuickBooks, that integration is just huge, in my opinion. It is well worth it. Even if it's a little bit higher on the percentage on that swipe rate, that integration is just huge, in my opinion. So I always think that that to me a huge piece of it. And I always encourage the clients, if they are using something else, it's get rid of the aggravation and save the time. Just for that alone, let alone all these other things that you're going to talk about here.
Yeah. And it's not, it's not a fee if you don't use it. Right. So it definitely is something that you can compare, right? If you are using Square, PayPal, or some other method, to collect payments, compare it to, to doing it inside of QuickBooks. There's a variety of ways to charge credit cards or bank and ACH. E-invoicing is where you send out your invoice. You've got a pay now link, or a button for them to pay on their end. There's mobile payments, so you can process the credit cards in the app. Even if you have there's a Bluetooth card reader, right? So you can connect it to your mobile device, or even inside of your QuickBooks Online to be able to swipe the cards. If you're swiping in person, you get a lower rate for those types of things. Payment links, those are both in QuickBooks Online and Desktop now, where you can create a link to pay. So you can text or email or however you want to send those payment links. With QuickBooks Online, you also be able to create like a static link, right? So it could be, if you're taking like donations or things like that. And one of the things that it doesn't do is integrate with your shopping cart or your website, right? So you can utilize payment links and put a payment link on your website, or pay some fees, right? Like whatever that might be, if it's a standard donation of $25 or something like that for a nonprofit, or if you have like a constant service that's always the same amount, you can use the payment links and be able to collect it that way. And it has some smart technology built into it so that it can kind of put those into a holding bin so that you can then apply those to, your customers' payments, right? There's a pre-funding option where you can, if you're using QuickBooks Payments, and maybe doing like get paid ahead of time, right? And then if they pay within a timely fashion, some of the fees are waived by doing the pre-funding, and the rates are relatively competitive, right? So when you compare those with Square, PayPal, the more common online connection, they are relatively competitive. And then like you said, Michelle, those payments or those fees may make up, even if it may be a little bit more, those fees may be compensated in time savings based on the integration. I've created a QuickBooks Payments course on schoolofbookkeeping.com. I have a link there to kind of go through, a lot of all of these extra things. You can click on that if you want, and you can access it for free. There's no charge for that particular payment course. So we want to talk a little bit about one of the things that's newish in QuickBooks Online payments, right? Because there was a challenge when you have refunded more than you've collected, right? So like, let's say you just have a refund one day, and that's going to be money coming out, right? So it's leaving the bank account. So what has a challenge sometimes, and you maybe get an alert in the past, you would say we couldn't record a deposit, right? Because a negative deposit is really a check, right, Michelle? That's a money leaving the account. So in the past, you would those funds would or that transaction, the automatic making of the deposit was being held up because there was a challenge with that, and you would have to kind of work through the workaround. Michelle, what do you want to say about this negative deposit matching? Oh, you're muted.
Sorry, the dog was barking. Yeah, it's just great that they finally have done that, because we did have the big workaround where we had come up with a way to record a negative deposit, and now it's nice that you can do that. So as you can see in that second screenshot down there, it's coming through as money spent from the bank, because like you said, it's money coming out of the bank. And people are like, wait, how does it work? But why would that happen? And like you said, in a retail environment or e-commerce environment, maybe you just had a lot of sales. You had a big Memorial Day sale or something like that, and you had a lot of sales going on. Well, then after the sale, for some reason, you might have a lot of refunds, and the refunds may exceed the daily sales. So you may actually have one day where you had negative sales for the day because you had refunds that exceeded the sales. So you have a negative daily deposit. And this is a situation where you have a negative amount that day where you actually had cash paid out. And so now QuickBooks has that ability to record it as money spent, money coming out. And so it alleviates that big workaround that we had. So I'm glad that Intuit listened to the feedback from people. So, when we say, hit the gear feedback, Intuit really does listen. And the more people that send that in there, the more likely it, rises up to the top where something gets done. So do send your feedback in. And now we have that in there. So that was covered in the certification, the recertification. So if y'all haven't done that yet, remember you do need to recertify by June 30.
Yes. And so there was a question in the chat here. So how does this affect the sales receipt on the customer screen or payment of the invoice? Really, it's not, it doesn't have an effect of it, right? It's, as far as the customer is concerned, this is really just in the instance of how do I record in the bank deposit reality, right?
Right. So in your point of sale system or whatever system they're using, you're going to enter a refund to that customer. So, however they're doing that, a credit memo. So it's going into the customer as a refund. And then it's coming as a negative, and all the sales and refunds for the day, it's a negative deposit at the end of the day when those are all grouped. And that's where QuickBooks couldn't do that previously. It could record a negative deposit. And now it can. And that deposit shows up instead of in the money received column, which always, deposits always showed up in money received. Now it's going to show up in the money spent column because it's actually a draw on your checking account for the day. So it's just changing how it shows up, and it works now without us doing a workaround to make it work.
Right. Less work for us to be able to reconcile that money coming out of the account when that's happening.
Exactly.
Okay, so there's this QuickBooks checking account that I want to kind of talk a little bit about. Originally, it was called QuickBooks Cash because there was a cash flow hub or cash flow center tied to it, those types of things. But they rebranded or changed it to QuickBooks Checking, right? So when you sign up for a payments account, the recommendation from Intuit is to use QuickBooks Checking as your default deposit account. So it's an online business account, they have this concept of envelopes. So if you subscribe to Dave Ramsey or any other financial person where it says set money aside, so that you're not surprised with things like payroll and sales tax, things that you're not necessarily supposed to be spending. You can earmark those things, and you can, if you're saving for something, right? Or you can set up an envelope and move money to it. But those envelopes, money that's sitting in the envelopes, is actually interest bearing. I think the interest is now 1.75%, which is fairly competitive, I think, for an interest bearing account. You have instant access to deposits when you're using this as your default deposit account for QuickBooks Payments. And what is an instant access, right? So when you collect a payment, once that has kind of gone through the authorization process, you can get instantly, you can have that transferred instantly into the bank account. It's usually about 30 minutes or so. And under normal circumstances, that instant access option is a fee, right? If you have ever sent or received money through Bill.com, they send a myriad of advertisements or notifications asking you if you want your money faster, and they do that not out of the kindness of their heart, but because there's a 1% fee for that. So this is the same thing, same concept, right? So you can get your money quicker. So if you have a cash flow issue and you need to have access to funds, you can get that within 30 minutes. If you're using the QuickBooks Payments, the QuickBooks Checking with tied with your QuickBooks Payments, you can get your money instantly and avoid the 1% fee. Now, this is not the 1% fee for ACH. So all your transaction fees and those types of things, those are still going to happen, right? So it doesn't matter if you have the QuickBooks checking or if you have it put into your bank account anyway. Those things are going to still happen, but this is just talking about the instant access piece of that. There is a debit card that you can have. I actually have one sitting in my wallet right here. Very snazzy, nice and white. But you can use it for, for auto payments or just like any other debit card. One of the complaints, I guess, about the QuickBooks checking is that the accountant access has been limited. Like originally, when it first came out, accountant couldn't even see it, which was a challenge, especially because it's a bank account. You might want to reconcile that every once in a while. The nice part, of course, is that those transactions in theory should all be entered automatically, but you still want to reconcile the account. Now the accountant access is such that really if there's anything that has to do with real money movement, you won't have access to that, but you should have access to pretty much everything else. You'll be able to see the transactions coming in. You'll be able to download the statements and actually perform a reconciliation, even if it's the QuickBooks checking. But there are some things that only the account owner could do, which is pretty straightforward, for a financial institution type of thing. And the transfers, they do take several days. So it's not like you don't get instant access where if you're putting money into the QuickBooks checking account or taking money out, it does take a couple days. And of course, when you're connecting your regular business checking account to QuickBooks checking, there's that whole process of confirming the account, the test deposits and those types of things. So it's a good idea if your client has set this up as the default account, because of course Intuit will strongly suggest that's the nicest way of putting it. And sometimes they may have done it without realizing exactly what they've done. There's I signed up for a bank account and I didn't even need one, right? So this is why we want to talk about these things, to let you know that these things are there. And it might be a conversation ultimately that you end up having with your client about that. Speaking of accountant access, right? So, when you're when clients are setting up their payments accounts, or if you're recommending that they set up a payments account, it is a financial institution, right? It's money movement. It's there's real money involved here with money going back and forth. So it is viewed by Intuit as a banking finance. They're obligated by all the banking rules, the anti-money laundering laws and all of those things. So there is a way that you can be an authorized user, right? And you have to you have to, or they have to, sorry, your client actually needs to provide that to the payments team so that you are an authorized user. So if you ever have to contact Intuit about something about their payments or merchant account or deposits or whatnot, they won't talk to you unless you are an authorized user on the account. So actually, that's going to be my action item after these, is to put the process to be able to be added as an authorized user on the merchant account, because it's an obstacle, right? When you can't talk to Intuit for something like that. I mean, I unfortunately had to have a lot of those conversations. Like, unfortunately, I can't divulge, right? Because it's a financial institution thing, right? All right. So our next poll is not on my screen. There it is. Okay. What is your preferred payment option? Square, is it PayPal, is it QuickBooks Payments, something else? Or maybe you're agnostic to payments and really don't care. I saw a question here. Yeah, and it's a common question about the fees, and we were just discussing it actually before we went live. So we want we're kind of talking this out. So a lot of times, because there is a transaction fee, there is this mindset about maybe transferring that to the client. So Michelle, you have a thought about that. So let's kind of discuss that.
Oh, on the credit card fees and such, and whether you should pass them off to the client.
Yeah.
I don't like that. I mean, if I'm getting an invoice or a bill from somebody and they've got a 3% credit card fee on there or whatever, first of all, I'm going to call them up and ask if then I can pay it in cash or write them a check to avoid the 3% fee. But I don't like the nickel and diming. I mean, it's just like, I don't like it. I would rather them increase their fee. And if you're going to charge me $100 and then charge me a 3% credit card fee, or 4% or 5%, just charge me $105. Just bump up your fees to cover the cost. I don't want to steal nickel and dime. Just bump up your fees to cover the cost of credit cards, because everybody does that these days. So cover that to cover the cost. It's a cost of doing business. So just increase your fees and your prices to cover the cost of credit card charges, in my opinion. Yeah. I just don't like it, because, and not only that, but you can't have it to where if I pay with a credit card, it automatically adjusts to include that amount. So it's almost kind of like an after the fact type of situation. So it doesn't work well anyway. So just increase your fee to cover the cost of that, in my opinion.
Yeah. Yeah. As many of you know, I live in an RV and we drive around the country a lot, and I can never tell what the price of fuel is because there's this constant changing of the price at the gas station. Like, if you're a rewards member, it's this price. If you're paying cash, it's this price. If you're paying with credit card or a fuel card, I mean, there's like 4 different prices. So I'm like, all right, I need fuel, right? Just whatever it is, and then, but it is frustrating, right? To understand, well, it's, if you pay with cash, it's this. If you pay with credit card, it's this. Right. But I agree. I think you have raise a good point that, really look at all of your fees or your expenses and make sure that you're making a profit, right? I mean, that's kind of the goal of all this. And regardless of how they pay, I think, I'm trying to remember, there was a show I was watching, and now it's, of course, go ahead.
Well, so Bobby just posted in the chat here that they got a $6,000 fee, which is common. A lot of us have $1,000 fees. And they said, we don't want to have to eat the credit card fee on that. And I understand that. Okay, so are you willing, if I owe $6,000, are you going to give me a discount if I'm going to write you a check to pay with a credit card? Are you going to discount your $6,000 fee? In my opinion, no. You still want your $6,000 fee, right? You're not going to discount that necessarily if they pay in cash. So you really should be bumping up your $6,000 fee to $6,200 or whatever it comes out to be to cover the cost of the credit card fee, because you still want your $6,000 fee that you earn. You still want your $6,000. You don't necessarily want to discount that either if they pay in cash. So, and somebody posted on the dentist in there, it's the same situation. If the braces are going to cost $2,000, $3,000, $4,000, you get a discount if you pay with a check or you pay in cash. And in my opinion, just bump it up to cover the credit card fees, unless you are going to give people a discount if they pay cash. In my opinion, credit card is the way people do things now. So you increase your fees to avoid the hassle of discounting then for cash or check.
And then other people are putting out some other ideas of, like, if you really don't want, certain fees to be part of your QuickBooks, just turn off the pay by credit card and only take ACH, because that's 1% with a maximum of $10, right? So there's other challenges about ACH, and we'll talk about those a little bit later. But if we're just talking about apples and apples with fees, yes, the fees on ACH transactions are significantly less than credit card fees. And there's a reason for that. But I remember it was the Prophet was it was a show I was watching on, and he was going into he was going into a restaurant, It was a barbecue restaurant. They always had lines out the door, and they didn't accept credit cards because of the fee. And he showed them on paper. It's like, here's how much business you're missing by not accepting fees. That certainly makes, or not accepting credit cards.
Right.
That certainly makes up the difference in the fees that you might have to pay. So it is a different thing, right? There's a mindset set thing about that. And I clearly we struck a chord because there's a lot of information floating in the chat about that or not. Whoops. I went, there it is. Okay. I'm going to share the results. So it looks like, QuickBooks Payments is the preferred payment option. So it definitely is something pretty common. What were you going to say, Michelle?
One more quick question for you. So somebody asked in the Q&A about that QuickBooks checking. If somebody set it up by accident, how do they get rid of it? And I know that we, the accountants, can't close that account for them. How do they close that account? Is it easy for them to do that?
I think it's really just a matter of not using it, but you will just want to change your default payment, deposit account, by them contacting the payments team to be able to do that. But again, it's going to either need to be, the account owner, because when you're changing, where funds are being deposited, that's going to be under a lot of scrutiny. So either being an authorized user, I mean, they may not even, let you do it, even if you're an authorized user. It may need to talk to the account owner in order to do that. And by account owner, I'm talking about the merchant account owner, the QuickBooks Payments merchant account, not the bank owner of where it's actually being deposited to. All right. So disputes. This is a touchy subject for me because I just got one. So it's a very topical. I was catching up on some billing, and I charged my customer twice on the same day for something, and his credit card company caught it and sent him a message and said, "Hey, it looks like you were charged twice by this guy," and of course he saw it as was like, well, I only normally pay him once a month, not realizing that I was catching up on some back billing. So he disputed it. He told the credit card company, no, that wasn't me. And he sent me the email that he got from his credit card company, and I told him what was happening. So this is a lesson in being, talking to your customers before you charge them twice on the same day. But yeah, now I'm going through the process of a dispute, right? So, now once a dispute happens, right, this is where the customer refuses payment through their financial institution. So this is a perfect example of what just happened. The financial institution reached out for a good reason, right? It looks like a double charge. And under normal circumstances, he wouldn't be charged that on the same day. But now the burden of proof is on me, right? To now prove that this is what happened. There's and of course this all starts a chargeback process. Now the money's being pulled out of my account, so there's going to be an extra fee for that. And now we have this awkward discussion with the client, because now it's a potential ding on the merchant account. And those types of things. So there is an article that I wanted to link through about, handling the chargebacks and those types of things, because now there's a reality of, okay, if money being pulled out of my account, there's a fee associated with that. Am I going to recoup that? Am I going to charge the customer back the fee, for that? And now we have to have that discussion, to handle in all that. So yeah, there's a screenshot of the alert that I got from the payments team. Like, hey, this guy, one of your customers disputed a payment. So there is an alert, right, from the payments account, to let me know that is, something that I now need to address. So it gives me links and methods of ways to do that. You can really just do that inside of your QBO. To be able to do that. But, handling the dispute is a challenge, because now you have the payment's made, the deposit is recorded, potentially with others, and then the payment is removed, and that chargeback fee is assessed. Put a note or a link in a note, a link to a blog article I did about the needs attention, and we'll talk a little bit more about that, specifically near the end of the webinar today. But then handling the disputes and actually how you would handle that. So the payment is made, there's a payment, right? And the deposit is recorded and there's a deposit. So then the fees are removed and the chargeback is assessed. So there's going to be a check. One of the ways to handle that is entering in a check from the bank with the amount plus the fee and the offset directly of the balance back to the customer to just put it to AR, right? And then you put in a separate line item for the fees expense, right? So for the $300 and the fee is $25. Now the $325 is the check that's leaving the account, and the $300 goes back to the customer to, give them a balance to pay again. And then the fees are associated with the expense. And then the easiest thing to do is go into the original payment and then apply that to the check. That way those two, the disputed payment and the check, they offset each other. And now you've got that invoice that you can now resend to the customer to get another payment for, or if you're going to add the fee, you can put that on the original invoice and send it off again. All right. So then there's this alert that shows up on your QuickBooks, this nasty red alert that annoys accountants and bookkeepers to no end, right? Because there's on the invoice tracker, right? And so you go into QuickBooks Online, there's an invoice tracker. When there is a dispute, the dispute is the end of the train, right? It's the caboose of the invoice and the payment, and then there's a dispute. This also could happen with the non-sufficient funds, right? So those two situations are going to make this nasty needs attention on your invoice tracker, right? Because you can see here in the screenshot, it's got you can see the life cycle of a payment, right? Sent, it was viewed, it was paid, deposited, and there's this nasty red deposit failed, right? And as long as that invoice is tied to that failed payment, that invoice tracker is going to have that red needs attention alert there for all time, right? So the way that you get around that is either, first option of applying the failed payment to the check, the money coming out. You can do that, and now that payment is not tied to an invoice. That's the caveat here, is that the payment needs to be tied to the invoice directly. So if you tie the invoice or the failed payment to the check, it's going to AR. Now those two aren't connected. It's not an invoice to track, so you won't see that here on the invoice tracker. The other way to do that is with two journal entries. You have some kind of wash account, for payment disputes or whatever it is that you want to call it. It could be another income account or expense account. You then apply from accounts receivable to that wash account, tie the invoice to that, and then reverse it same day as the payment, and then tie the payment to that other invoice. So you have this two journal entry bridge between. It's kind of like a mediator for an arguing couple, right? So they get between those two journal entries, get between the invoice and the failed payment, and then therefore there's no failed payment, and then that nasty needs attention will go away. There's an article about that. I've got a little video and to walk you through those two processes. Now, what if you don't want to deal with disputes? Right. So QuickBooks Payments has offered a brand new service. Of course, this is not out of the kindness of their heart. There's an additional fee along that, but might be worth it, right? So you can sign up for this service. But here's what's going to happen. You're going to have an additional 0.99%. Why can't they do 1%? But that's 0.99%, the gas companies. There's a 99.99% fee on all transactions. So it's an additional fee for every transaction. But the benefit is you don't need to approve the dispute, and all that things that you need to do to actually tell the payments processor, yes, this is a legitimate charge. Here's all the information that I have, for that. You don't need to prove anything. The payment protection process, the dispute, I can't say it. The payments dispute protection service just pays it, right? So this particular dispute would just refund the charge back to the customer, and I don't need to prove anything, right? So there are limits, however, right? And the limits are $25,000 per year, or $10,000 per transaction. So if you charge somebody $15,000 and they dispute it, the maximum they are going to pay is $10,000 of that. You still would need to, figure out the other $5,000, between the two. And then of course, $25,000 over the course of a year. So you have like this bank balance of, or not, I don't want to say bank balance, but you have this balance of a maximum of $25,000 throughout the year. So kind of look at, see if this is worth it, right? Look at your disputes that might have happened. Is your time and money worth it? Not having to deal with disputes at all. Of course, you would not have this needs attention shenanigans, right? Because it would just appear inside of QuickBooks like the payment went through, right? Anything that happens after that, it's like it's a settlement funding money, right? So that's one of the things. That's a new thing there that I want you to know about. Michelle, you have a thought about that?
Well, no, Dan, I was going to say it is a nice option. And the one thing I did want to point out is only on the debit and credit cards, only on the plastic, not on ACH or PayPal or Venmo or anything like that. Only debit and credit cards, not ACH payment. So that's something to keep in mind. Only debit and credit card.
I was looking at the article here as well, that you can turn it on and off, right? So the challenge though is that if you turn it off, anything that was covered is no longer covered. So once you turn it off, you're basically everything's exposed potentially to a dispute, and then when you turn it back on, it's only covered from that point on forward. It doesn't cover, like if you can't cherry pick,
Right.
times that you might have more disputes. If you turn it off, everything else is exposed to potential dispute and not covered by the dispute service.
Yeah.
All right. So go ahead. Did you have something?
No. Go ahead.
Okay. So handling a refund. I see this a lot, and I've fielded a lot of questions about actually refunding, especially when it has to do with a payment. So the main thing to realize is if it's before 3 p.m. and it might be 2 p.m., but specific time, if you charge someone a credit card payment, you're more than welcome to void it, as long as it hasn't settled, right? And that settlement is typically on the Pacific time. So you East Coasters, you get a lot more time throughout the day to potentially void a transaction. But you can just go in and void it, and it's as if it never happened, right? So the challenge is that once that cutoff has happened and it starts the funds of actually, coming into your bank account, and that customer needs, either canceling or you would like a refund, you would have to do a refund, right? So there's a school of thought about doing a credit memo. But then, the reality is when money comes out of the account, you need to account for that. So there's a 2-step process when it becomes with a credit memo and a refund. So QuickBooks Online has this option of a refund receipt, which is an equal and opposite refund, or equal and opposite of a sales receipt, right? So that pulls the money from the bank account and it reverses the revenue for that. So I like to use I would recommend using a refund receipt. And if you've used, as soon as you choose the payment method for the customer, you'll be able to process the refund back on the card. Now, you have to use the same card. This is again one of those money laundering things that you can't put a refund on a different card than of which you processed it. So it has to have been processed. The original charge has to have. I can't say it. The original charge has to have been processed through QuickBooks or through QuickBooks Payments. So it has to be able to see that charge went through on that card in order to refund or partially refund back to that same card. ACH is not refunded. So because of the way money is moved that way, needs to be initiated through another ACH push, back to the customer's bank account. That could be done either through Melio or your bill pay service or whatever it is that you want, even through your bank, if you wanted to. And then you can also go into the merchant center, but only for the money movement, right? Like you can go into your merchant center and process refunds, and in that regard, to be able to do that. But just bear in mind that the refunds themselves are only going to be the money movement piece of that. You still would need to account for that either through a refund receipt, or if you do want to use a credit memo. Now, Michelle, you have any thoughts about the credit memo process?
No, sorry. You got me to do it something else. No, credit memos are great. Make sure that you do, if there's taxable and non-taxable items on the invoice, make sure that you break those out. So that on the credit memo that you have those separated out there. So that you do make sure that you adjust the sales taxes as well. If you aren't doing each item on there, make sure that you do at least do that.
Definitely want to account for the items and the sales tax. That's a good call out too.
Yeah.
All right. So I noticed this about 6 months ago, or maybe about a year ago, that QuickBooks Payments and new QuickBooks Online subscriptions are getting like a half of an account. It's kind of a I think some people have some opinions about this, but I want to talk a little bit about the realities here. So all new direct billed QBO subscriptions are assigned a merchant account, right? So when you sign up for a new QBO subscription, typically there is an opt-in for accepting credit cards through the easy interview that you're presented, right? Like who are you? It'll ask you, who are you? Are you the owner? Are you the accountant? Are you someone else? And then it will ask another question, and it just seems like a simple startup question, right? Do you accept credit cards, right? So when you say, yeah, I would like to accept credit cards, what happens is that invoices are going to be payment enabled, right? And by that means, when you look at an invoice, it'll be turned on for credit cards and bank transfers because you've answered those questions, presumably, when you first open your QuickBooks. The challenge is that the account had not been fully set up yet, right? So we saw this on the Facebook group a couple of weeks ago, where one of their clients had set up a new QBO subscription, and someone had opted in. They don't know who or how, but somebody had answered those questions, and they got an invoice. And the user was like, "Oh, well, they accept credit cards, so I'll pay my rent," right? Which was what they were getting invoiced for. I'll pay my rent with a credit card. Then, what happens now is they pull the money, right? Intuit pull the money from their account, and then they get a notice. The customer gets a notice that, hey, you've got money. Would you like to finish your setup so that you can get it? Right. So now they're kind of their money's in limbo until they set it up. But the reality of the business practices is that they never wanted to accept credit cards. So they didn't, because of, presumably these fees and those types of things. They, not really a great idea for, somebody in their business to be able to be doing that. So now their money's kind of like locked up, in this escrow account while they're, the reality is that money has been pulled from the credit card from the person that has been paying it, but it's not been completely set up yet. So then they ultimately went through a dispute. So now there's that process on top of all of that, to either get their money back. The simplest thing would have been to just finish setup, let it get deposited, and then, no longer use, turn it off in the preferences. The other challenge of all of this is that because they're doing this inside of the QuickBooks product, there's no ProAdvisor pricing. As many people may or may not know, that when you are an accountant or a ProAdvisor and you refer people to QuickBooks Payments, you can actually get them a discount on their fees. So by doing it this way, it's direct billed fees. So there's no discount when it comes to that process. I did put in a link there. If you don't want to go through that whole process and you have a client that you want to get them, the ProAdvisor discount, for payments, you can put in an application there, and finish the process, and we can, our Oompa Loompas on the back end can connect it to their QuickBooks Online account. It just needs to be within the first 30 days. I have on the screen there, last 30 days, but I guess within the last 30 days rather than, it needs to be a newish account. Right. And then we have a link there for a video that we did to reiterate what we're talking about here. The caveat through Caleb Jenkins, he actually brought to attention. He set up 10 new QBO accounts, and this process didn't happen. Right, didn't get that half account set up, and we determined that it reached out to Intuit. It's direct billed, meaning that if you're creating the QBO subscription and putting on your firm bill where you're paying for the subscription, that doesn't apply to this process. So you're creating a QBO company and you're having the billing being done by the customer. That's when this potentially can happen. Just want to make you aware. It may be another one of those hornet's nests that we're stepping on of like, how could they do this type of thing? I do understand that, because of the benefits of QuickBooks Payments, they want to make it easy for people to sign up for the service and that sort of thing. But because we are dealing with actual money movement, there's a flip side to that. Michelle, do you have an opinion? I know you want to stay Intuit agnostic of all of these things, but what do you think about this scenario?
No, I agree with what you said there. And I don't like it when clients set up their own QuickBooks to begin with. So I like it when we do that. And I do like us trying to fix it for them and all that. Sorry.
That's okay. And,
I agree
if you can save them some money on the fees, why not? Right. So
exactly.
That's
another way we can add value for them.
Exactly. All right. So, another one we want to talk about is the initial funding delay. So when you, in the past, right, there used to be, charge limits, when it came to, how much you could charge monthly. Because again, we are dealing with actual physical money movement. Well, not physical, it's digital money movement, but because you're moving funds from one bank account to another, there's a risk. right? There's a risk of these disputes. There's a risk of, fraud and those types of things. So the payment accounts had I think it was $10,000 monthly limit initially, right? And then if you had a business that would potentially charge more than that, then you had to go through this process that you were good for it, right? Because it's, you would have to, send a bank statement in 6 months and, all if you just wanted to have a slight increase or a significant increase, either one, over that, $10,000 monthly charging limit. So to combat that and make it, again, to kind of make it easy to do these things, they eliminated the monthly limits. However, to go through that process, you don't have to do all that stuff to prove that you're good for the funds. But the first payments are going to be monitored, right? So somebody's got to actually watch the funds go through, and they're monitored. I don't think that there's anybody actually like looking at the funds going through the process, because it can't be too exciting. But the first payments are actually monitored through that process, and that could take up to 5 to 7 business days. So it's just something to be aware of, that those initial deposits are going to be delayed because they're actually being monitored, making sure there's no abnormalities and they want to establish a history of transactions through that. So I had recommended QuickBooks Payments to a company. They switched, right? So that 5 to 7 days was a pretty big hit on their cash flow when they were accepting credit cards, somewhere else. So there was a week basically of those funds not coming through. And then once they were all monitored, whoosh, all of them came into the bank account on one day, and everything was fine. But having that conversation up front to let them know that, hey, these transactions are going to take a little bit of time before they get there. Once they are, past the monitoring, credit cards should be turned on to next day. ACH is going to linger around 5 days from deposit, or from time from collection to the time it's actually deposited, but ultimately will turn into next day. But that could take up to 4 weeks of monitoring, again, because different types of funding. Okay, we're coming in for a landing here. So we'll throw out the last poll question here. Did you learn something today? Because that is certainly our goal when it comes to the QB Power Hour. Did you learn something new?
Okay,
Michelle?
And I did have a couple announcements. So I put in the chat room, I did put the link, and we would please appreciate your vote for Dan and I for Top 100. So I did put the link in the chat. And so you don't forget, just go ahead and vote today. And we would love to have you all start applying for Top 100 next year. And so as Murph mentioned in the chat, go ahead and track whenever you join us for these QB Power Hour webinars. Keep track of when you're attending that. So just start a little note or a notepad or Word or an Excel file or Google, whatever. Keep track of when you're attending these. And then next year, when you're applying for Top 100, you can report your attendance, and that will be asked, and you can record that, and that'll be part of the Top 100 for next year. And those of you that are going to Scaling New Heights next month, I hope you'll say hi to me. I will be in a booth, or most likely on my scooter running around. You'll see me somewhere there. Dan, do you want to tell us what you'll be doing next month?
Yeah, so I unfortunately have to decline coming to Scaling New Heights this year because my son is in the Navy, and they earned what's called a Tiger Cruise, which allows them to invite a family member to join them on their last leg as they come back to the States. So super excited for this opportunity. I have to go to Hawaii to meet him. I mean, that's just I don't know if I can, stomach that in June.
Yeah.
But that's where they're offloading the airman. He's on an aircraft carrier, so that leaves room for people to join. So it's kind of like take your dad to work day for several days on an aircraft carrier. So it's a really exciting experience. Unfortunately, it's right over Scaling New Heights, so I had to decline. I was scheduled to teach, and I had to decline that as well. But this is a pretty amazing experience. I really can't pass it up, and really, really cool to see, what he's been up to, and spend some hopefully some quality time with my son as he comes back to his first overseas deployment.
Oh, that's going to be an amazing experience. I think that's a really good reason to miss school. That's going to be incredible. I can't wait to hear all about it. So I hope you enjoy that, Dan. So thank you, Dan, for your expertise today on QuickBooks Payments. You are the guru in this area, that's for sure. And we also want to thank Merck for all the hard work he does on the Top 100, because he's the guru behind the scenes on Top 100. So thank you, Merck, for doing all that. Thank you guys for attending. And thank you, hopefully, for your votes, as Dan and I cross our fingers, because it is hard to get to that and do that. So we do appreciate all that. But thank you all for attending. And thanks for all your work doing all this, Dan. And
all right.
See you all next time.
We'll see you next time on the QB Power Hour. Actually, next time we're going to be having File come on and talk about their expense management. So we talked about money coming in today. We'll talk about money going out next time on the QB Power Hour. Hope we all have a great day, and we'll see you next time.
Thanks, everybody.
We hope you enjoyed listening to the QB Power Hour podcast. If you have any questions, feel free to ask them in our Facebook group. You can find those resources and much more at qbpowerhour.com.